now for our chart of the day. Joining us for a breakdown is Kevin Horner, Senior Manager of Trading Services, Charles Schwab. Had to catch myself there because, you know, you're so used to companies being in the billions, and now we've got companies in the trillions here. All right, Kevin, so let's talk about this chart. I mean, it's been quite the climb for Alphabet, Google, and there were believers who said this would happen. What's your analysis here?
Well, the short-term trend is pretty intriguing here. Of course, we had this explosive move in the last couple weeks here, and beginning in basically September 1st. And the channel that was tradable thereafter looked like it was solid until just the last 2 days when we actually traded through the upside of that channel, which stands out to a lot of traders, of course. Now, the question is whether we can get back and maintain this newly developed price level, essentially turning what was the top of that channel into a new area of support. And that's entirely possible, just as is the potential to see this price action get thrown right back beneath that upper trend line and back into the range of the channel itself. Seems like we could be a little overextended here in the short term, but we all know that overextended and overbought conditions can last far longer than we might expect. But in the short term here, that 242, very important level of short run support here for Alphabet.
Okay, so that's the short-term picture. What happens when we zoom out? What do you notice about the patterns?
Well, an explosive move, but the 242 shifts a little bit and gives us the gap ledge for short-term support. 225 becomes a very important level here. Notice that orange 20-day moving average. We've been above it since about mid-June, and it's been cruising, but that newly established gap ledge really is likely to give traders an area against which to balance their bullishness now. So you would like to think that if the trend is going to continue, that we'll maintain this gap and or the 20-day moving average confluence here. Moves below that would be notable and significant, of course, but in the near run, that 225 following the 242 level could mean a secondary level of support. So if traders were just holding here, you know, you look at 242, under which on a close some traders might lighten up Alphabet and then take it down to 225, and if it holds 225, well, then you've got an opportunity to think that the trend can continue. But there's nothing negative about this chart at all, except for those traders who might be feeling a little uncomfy staring at so much profit at this point.
Yeah, I don't know if they're uncomfortable with that. And listen, I mean, it certainly seems to be a little bit more upside. The Bulls trying to inch this forward this morning, up by 0.75%. Thank you, Kevin. That's Kevin Horner, Senior Manager of Trading Services, Charles Schwab.